Some green arrows overseas this morning and a positive tone in U.S. futures as Germany's GDP came in better than expected. Jamie Dimon meets with shareholders today in efforts to relieve some pressure on J.P. Morgan, which could provide a bounce for the sector. The street is gearing up for Friday's Facebook IPO. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Rutherford, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. So things are off to a pretty good start this morning, Scott. We have German GDP coming in better than expected, lifting overseas markets, setting a positive tone for futures here. Now the question is, can the market sustain it today?
Well, that's a big question, and a lot of people had a few questions that they had to go with yesterday on the close because we closed below 1340. Which was a big spot and technically bearish, but recently it feels as if the market just tries to trap everyone. The right trade for momentum traders was to go home probably short last night considering we closed on our lows, and anyone looking to buy a dip for an oversold rally was probably wishing for a down open to buy. So what happens today? We come in, we're up 7-8 handles, so no one wins on a short-term basis. So what we have to do today is we have to look at the first 30 to 60 minutes of trade, see if this gap up holds, see if there's commitment to it, see how certain sectors actually hold up to see if it continues or if they just short the open for what could be lower prices as we head into later this week.
All right, well, let's judge the market, not necessarily judge the headlines. Let's take a look at the S&P and tell me what are the key levels that you're looking at right now.
Well, let's take a look at the chart. Like you said, we'll go right here, and you'll see that you have to judge it from different time frames. Okay, from a long-term time frame, if you remember, this was that October low, so I tried to draw this trend line. And this trend line broke way back when. If I get this out of your way, you will see that this trend line broke in, I would say, early April. Okay, and that was your time to get out at first. And that was also the time when the first quarter ended. We needed to see what was going on. And then you had a quick move lower, you had a retest. And more recently, when we broke this 1390, that was when you could have got out of some more stock. That's when you could have got net short. And this is when IBD put us back in a market correction. And since then, we've had 1, 2, 3, 4, almost like 8 or 9 sessions. And 8 of them, I think, were negative as we closed down here at 1336. So on a short-term basis, we've had a nice move lower. We're a bit oversold. On a longer-term basis, the real macro support, if you look at this head and shoulders top pattern where here's the left shoulder, the head, the right shoulder, the measured move from 1420 to 1360 really goes all the way down to 1300. So, at that particular point, I think this is your real area to buy for macro trades. But unfortunately or fortunately, markets trade, so you need to figure it out. And we have a lot of time left between now and the end of the summer. So we'll see, if 1360, which is now the new resistance, the new line in the sand, continues to contain any rally. And then we know yesterday's low is 1336.
And speaking of the end of the summer, we know May through June tends to be a little bit choppy with maybe even greater lows expected August, September time. So how do we brace ourselves right now for this type of action?
Well, I would just say keep it light and know your time frame. If you're a macro investor, we're only down about 5-6% off the highs, and so you're doing quite well. And if you're doing the right stock selection type of activity, you're doing just fine. If you're an intermediate trend trader like I am, you know what? Just be tactical. We know how to trade versus pivots, which is what we've been doing. And know at this particular point that you don't want to fight in oversold bounds because sometimes they get violent. Same way you don't want to start buying too early if you can't handle it. So if you go one more time back to this chart, here's your levels, okay? I would say at this particular point, yesterday's low is 1336. You could trade long versus that level. And you know that this 1360 is what contained this rally late last week. So I would say you could be a buyer for an oversold bounce back to this area. But at this area, I think guys are going to try and more short than buy. And if you are trying to trade an oversold bounce and it breaks this, just know this is the area we could head down to, so don't get stubborn.
All right, well, let's check the temperature of some sectors. Let's start with tech. A lot of big tech names, actually, like Apple and IBM, have a decent amount of European exposure, which I'm wondering how much that could be weighing on the Qs, which is below some key moving averages.
The Qs in the last 2 weeks stopped leading the market, so that was one of those faulty signals we talked about, and they do have some overseas exposure, but their balance sheets are strong. I still think you look to that area, but as of now, in corrective mode, everything corrects. But at this point, if you look at the chart of the Qs, you will see that coming into the 100-day moving average, this has been the uptrend back from all the way out of October. So it's just breaking below, so it's still showing some relative strength. Remember that descending channel tried to break above and failed. I do think it's going to have to do some work and prove that it could hold above this, just say 63 level. So I would say if you're long short term versus the low of yesterday of 63.48, that's okay. But again, just like the S&P, I would say that resistance will be coming in at this top end. So just know if you're playing for an oversold bounce, this is going to be some significant resistance right around that 64.86. It's still the place to be when the market turns, maybe just not right now.
All right. Well, and as you said about everything corrects, retail has been strong, but as you said, when the market corrects, everything does. So should we be cautious when it comes to retail?
I think be cautious, but also be opportunistic, because if you look at this sector, you will see compared to the other charts, if you go here, you will see that, look at the low that was put in back on the date here was May 8th, and look at this low here from almost April 24th. We're still above it. So you're still seeing relative strength in retail. So what I like to do is during corrections, if this group maintains its relative strength performance, this is going to be a group to go to once we start bouncing back, and that's when you have to look at your Lulu, your Nike, your Macy's, your potentially your Target. So we'll see how those are acting. So if we do turn up, that could be the group to go to, because right now it's showing relative strength versus relative weakness.
And lots of dangerous looking stocks in the financials. Goldman Sachs, Morgan Stanley, all under pressure. But now that we're hearing about Jamie Dimon meeting with shareholders, could a bounce in the financials possibly be on the way?
At this point, yeah. At this point, this sector's been battered and bruised, and whenever Jamie Dimon speaks, I know his reputation has been a little tarnished. You have to take notice, especially considering how beaten up JP Morgan stock has been. So if you look here at the chart of the XLF, you will see that, again, there are times to sell, times not to sell. This is when you could have sold a lot of financials when it broke this upper level. And now as we head lower, we're heading into some pretty big support here down at 1440. I think traders were looking for a down open to buy this. So at this point, with this little bit of an up open, I would say maybe there's room to rally back and retest this broken trend line or this broken support, 1495. So I think at this point, financials have some room to bounce, but this is going to be a key area where guys are going to probably come in and reshort to figure out whether we get this move down to here or maybe even down to the 200-day. We'll all see how the shareholders take to Mr. Dimon's testimony today or talk.
Yes, we'll have to keep our eyes on that, of course. And home builders have been trending higher. At what levels would you say we might see some pressure put on them?
At this point, I feel like people don't want to be long the home builders, but they act so well, so how could you not? So if you're not committed to the trade, have high-level stops. We talk about having high-level stops for when momentum leaves and low-level stops for when things start to break down even further. So if you look here at the group of the XHB, you'll see a lot of relative strength, but you have a bit of a wedge type pattern here. If you look, at this area right now, it's forming somewhat of an apex. So if the market starts breaking down further, I would say if you don't want to be in this group below 21-ish, that's your little cheating area, start getting out. And then if it starts failing below 2069, you could see this little wedge type pattern resolve to the downside, which would then take you to bigger support. And it also is showing a lot of relative strength, so it's hard to fight. But corrections do hit all sectors, so at this point, watch to see which way this wedge resolves. And if it happens to resolve to the upside, you're going to see some upside movement in the market.
Now, you've said transports can actually be a good tell. So what clues can we pick up from looking at the IYT?
Everyone loves the transport theory, and I'm not a buyer of that. I think that I want to see the market being led by the Russell. I want to see the market being led by tech, even the financials. But if you look at the IYT here, you will see that it's just starting to roll down. A lot of people are saying that the market's still acting okay because just like retail, we're still above the lows from earlier this year. So it is showing some relative strength. If you see, we're getting below the moving averages. At this point, I have really no interest of trading this because these things really don't trade well as an investor. I would watch this level here. If we start to break below 90.45, you could see a retest of this 200-day down here. So at this point, I'm not that interested in the transports, but it will be good to know whether or not they hold 90 for future direction in the market.
And oil, no secret, has been weak, remains weak. Is this just an avoid for now?
I've been avoiding it, not trading it because the ranges haven't been big enough. I think that finally it could be a good thing for America and a good thing for the market. But at 94 or 93, it's still in the 90s and it's still expensive. I think you need to see below 85 or below 80 for it to really be a benefit for the consumer. But for now, it's just a weak group, a weak commodity. So I'm going to avoid and just watch it and not trade it.
All right, well, we're going to take a quick break and then we're going to talk about some key levels in some leading stocks. So come back right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and we're talking about some key levels in some leading stocks. Let's start with Apple. Based on yesterday's action, I know that you said today will be a very interesting day for this stock. So it's coming to some crucial levels. What are they?
Well, yesterday it started to break down, and guys, like if we're heading lower, Apple needs to retest that 555 pivot, which was the low before earnings. So yesterday, a lot of guys made money shorted. It took time into the end of the day. I know for myself, I took a trailer home short to stay with it. So we're going to see if we see any kind of relative weakness in this up open in the future. So if you take a look at the chart here, you will see that yesterday closed on the lows, still above this 555 area. So at this point, it has a higher low, and this could be a trap. So if you're short overnight, do not be stubborn. I would say take a close look here. Use yesterday's high as a stop. I know that's what I'm going to do. If Apple starts trading above the high here of 567.50, I am done with this trade. If the futures go up and the stock shows relative weakness, I might add to it, and then if it starts breaking below 557.60 or 555, that'll give you a green light that perhaps we get a move down to bigger support, which comes in right here at the 100-day, which is around 524. So as of now, if Apple holds up today, I think the market holds up. If Apple starts to fade and breaks below yesterday's low on this 555, I think technology will be pressured and there will be a better short. But right now, let the action speak for itself and don't be stubborn with this one because it could hurt.
All right, now what about Amazon? It's been a little bit tricky. You didn't trade it at all yesterday. So how much more time would you say is needed for this stock?
The stock had a pro gap after earnings. Lots of shorts were trapped. I wasn't a believer of Amazon going into the number, but I think their expectations were so low. But at this point, technically, it's holding up very well, holding up better than a lot of things out there. If you look at the chart, you will see here is the earnings gap. Okay, like Apple came in and filled the gap. Amazon had a nice little 3-day push afterwards, and now it's been consolidating really well. I think it was upgraded today. It's up by $2-3 pre-market. You have defined resistance up here at this 230 to 232. When this market's ready to turn, I do think traders will be looking for a momentum trade above this 230 level because the shorts are trapped with this huge earnings gap. So I think this is on the half full side versus half empty side, and it should be on every trader's radar for that breakout to the upside.
Now, Google has been in the range between the 50-day moving average and the 200-day moving average. Where does it have to break above or below to get you interested?
Well, last week I was looking at Google and I was thinking that it could break above 617. It had another bad report. That's two reports that brought the stock down right to the 200-day that was buyable for institutions and macro investors. For a trader, it's been a lot trickier. So now I see a tight chart pattern, which is almost like a box formation. If you look here, you'll see what I'm talking about, coming into this zone. So here was last quarter where it disappointed, came in, tested the 200-day, held, rallied all the way back. Another, this time wasn't a gap, but it traded lower on earnings into the 200 days and held. And now you have this like, it's actually forming more of a pennant. So I would say at this point, I'm flat. If it starts to break above this 617 area, I think traders should jump on it to the upside. But if it breaks this area and breaks the 200-day, you could see some more corrective type action. So right now as a trader, you don't have to make big bets either way. Just jump on the train if it leaves to the upside above this 617 or to the downside if it starts breaking below this area, which is about 597.
Now, Las Vegas Sands is nearly 20% off its yearly high. So at this point, is this stock ready for a bounce?
I went home yesterday and I was said the whole tomorrow we're buying LVS for a bounce at 58.50. I don't know exactly where it's now, but with the futures up, it's probably not in an area that I wanted to buy it, so I need to figure it out. This stock's been so battered and bruised. If you look at the chart here, you will see ever since this outside day, the stock has fully changed. Or ever since this little momentum loss topping tail, that was your sell signal. And sometimes sell signals don't amount to anything, or sometimes they amount to a major switch. And once LVS started to break below this area, that was your exit. Okay, I know in the price point sheet we talked about this 56 area, very, very important. Broke that. So if you sold here, here, or here, you have the luxury of buying back at the 200-day, but just let this be known that if you're buying at the 200-day, a lot of stocks are only at the 100-day. The stock got a lot weaker. Okay, it shouldn't have gone all the way down to here. If you look at this channel that we were watching earlier this year, it basically broke that channel, which is probably trying to get people out of the stops. So I would say today, use yesterday's low as a pivot. That's, what is this? This is 49.09. Maybe they try and go from positive, break it through, touch the 200-day, and I will be looking to buy it for an oversold trade. If it doesn't and gaps up and continues, I think it's got some room to about 52. It all depends what the market wants to do over the course of the next few sessions. But at this point, if you sold here or here, you have the luxury of testing it here. But overall, it's been looking a lot more faulty than strong, ever since that little top area.
All right, and finally, JP Morgan continues obviously to get crushed by the $2 billion loss, S&P downgrade, but now the news that Jamie Dimon is meeting with shareholders. You've talked a lot about pivot points with this stock, so what's the magic number that you're watching for?
Well, yesterday it was like 36.50. That was the area that it bounced off on Friday. We actually had a nice cute trade from about 36.75 to almost 37.75. Yesterday it closed in the lows. I walked in here, I think it was up like 40 cents. So let's see if they try and bring it lower, and if the sellers can't break it below yesterday's low, I think you could play for an oversold bounce short term. So if you look here, that low is right there. That low is 35.76. We're opening up a little bit. If also, if they can't bring it in, sometimes you have to pay up. So if you pay up, know that first resistance is going to be around 36.62, and then the major zone will be Friday's high, which is controlling this gap since the news. So at this particular point, I think longer term investors could be a buyer between this 34 and 35.50 for what will be a better move at some point later this year. As a trader, know yesterday's low and knows Friday's low, and use that as your game plan price point sheet.
All right, let's do some quick hits here. Visa, bit on the move lower. Where's a good entry point?
Visa is actually a little tricky right here. It's broken that little upper channel. If you look at the chart, you will see no real follow through to the downside yet. It's still above the 100-day, above the 200-day. But if you're not committed to Visa and you think that it's going to roll over down, this is your level right here. The low here is 115.30-ish. If it breaks below 115.30, you at least have a retest of this moving average right here. And why not in this defensive type market? And this also has a gap which has been in place since I would say, what is that, since early February. So I would watch this area as big support, but if it breaks below this, I would take some off the table.
All right, and Groupon posting its first quarterly profit. The stock shot up on the news. What now, Scott?
Groupon yesterday, a lot of guys were talking about it was up early, and I was like, why wouldn't it be? It was in the 20s a quarter or so ago. So at this point, maybe people are a little scared if they're short. So it had a big, I think, 15% or so move yesterday, and now it's up an additional 10% plus. So if you did get long yesterday and you took it into earnings, you put on some risk and you're getting rewarded. I don't typically do that. But if you're looking to buy today, I think you got to be a bit careful, because look at the size of yesterday's move and look at the moving average leaning down here at 14. If you did get long yesterday, I think this is a spot to sell, not to buy. So into this 14 area, you have huge resistance. And then I guess if it really gets frisky, I don't think it happens today, but it happens over the course of the next, from now till next quarter, it can get back to 17.29. So sometimes it's about your entries and exit. And yesterday, this ignited the move to what could be a 14 to 17. So at this point, buying the first day is tough. I think some guys might even try and fade this open.
All right, well, LinkedIn acted very well yesterday, continues to impress as the Facebook IPO draws closer on Friday. Even higher prices in the cards here?
I like this both short and long term. A lot of guys have been buying it versus support, buying it versus 101. It's above all the moving averages. Had 2 quarters now where they were impressive, where they met the street's expectations, actually beat them. So it's proving to be bought. And the biggest winners come from new issues, of the previous few years. And LinkedIn itself has now been public for a while now, and it's coming close to these all-time highs here, about 120, 122. I think if you're uncommitted to it, use this uptrend here. I would say if it starts breaking below 105, maybe that's your stop. I think you're too tight though if you use that. I would really use this. If you're a macro investor, this is where it gapped up. Remember on that Goldman upgrade? use 96 as your line in the sand. Stay with tier 1. At some point when the market's acting better, you might be able to add through this high here of 120, because I'm sure every trader in my room will be watching this 120 to 122 level for some type of momentum trade if it could take out that double top.
And speaking of those Facebook-related stocks, First Hand Technology Value Fund, SVVC, you've called this a sympathy play to the Facebook IPO. What's your strategy here?
My strategy is to see how much more it could bounce. What's funny or not funny, depending if you bought it there, a lot of guys like a month or two ago were saying, Zynga has to be an $18 to $20 stock. This has to be X. And then during the course of the last month and a half, they've all been battered and bruised. And now a few days before, they're getting a lift that people wanted a month ago. So if you look at the chart of SVVC, you'll see that it did have a nice move in anticipation, right? If you look here, once it traded above this 30 area, it had a nice move to 45. But look at this wide range potent bar. That told you to get out of the way. And then you had another wedge type pattern that broke to the downside. So if you didn't get caught in this bar or this bar, you know what? First screen day yesterday, I do think it's got some room to perhaps, because today is only, Tuesday, it has room to at least 30.77, and if it really wants to get frisky, you could probably see a move to retest this 34.35 area. This day woke it up. Why not? You could probably see this or that, but I would say start taking some off around this 30.77 if you bought on yesterday's volume at ignition.
All right, and finally, IBM has been under pressure. What are the big levels to know here?
IBM, it was our go-to stock early this year, and then it got tricky on the last quarter earnings. I don't really watch it as close, but it's been acting somewhat strong. If you look here, it's still above the 100-day. It's still above this pivot here, which was at 196.79. I would say, if it continues to hold above this 196.60 area, it maintains its positive composure, maintains its leadership role. Then at some point, if the market wants to get going again, perhaps this lower level pivot could be an entry for momentum. That area comes in at 203.25. But at this point, anytime you buy higher in this corrective phase, you're not getting rewarded. You can only actually buy the dip. So until that changes, I'd be wary of trying to play any momentum to the upside. So your line in the sand right here is like this 196.50. That's where I would be long against.
Okay, so where is your focus heading into trading today?
I want to see how much of this gap we hold. We're up, I think, 7 to 8 handles. I want to see if the indices get a push. Do the stocks act well, or do they act weak? If the indices get a push and all of a sudden Apple goes lower and it starts to fail and go negative, I'll know today we'll have a lethargic type of feeble bounce. If they pull the indices in and Apple doesn't go down and the banks don't go down and some of the key stocks also hang in there, you'll know that today could be a buyable day. That could last a few days, but I do think in my gut, yesterday's low is not the low of the corrective phase. So just be tactical, take your trades, and know your time frame.
Sounds good. Thank you so much, Scott. Have a great day, everyone. Happy trading.